Welcome to the show. Today we have a very special guest, and his name is Jonathan Ferrari. He's the co-founder and CEO of Goodfood Market. Jonathan, welcome to the show.
Nice to see you. Thanks for having me.
So the big question I think most people have, and I was thinking about this, Jonathan, do you have any relation to the Ferrari car company?
So that's probably one of the questions that I've received most in my life ever since I was a kid in school. Um, Distant relationship, probably. So my dad's side of the family is Swiss Italian, from Switzerland, but right on the border with Italy. And there's a decent group of Ferraris out there that are somewhat related to the brand. But I need to buy all my own sports cars on my own, if that's the underlying question.
So you're still put on the wait list when you walk into a Ferrari dealership, right, in Toronto.
Exactly.
That's really interesting. I have Italian heritage myself, so I had to ask. And I know that, way back, it translates to something like blacksmith, right? Ferrari, that's what it means, basically, when you do go way back. And when I researched my own last name, Speziale, it translates to apothecary, which were the, pharmacists in the medieval times. But I digress. Good food. But before we get into good food, let's talk about your early beginnings. I saw somewhere, I forget where it was. I read an article on you when you were a kid. You were saving up to buy a tractor. Is that true?
So I must have been 5 or 6 years old, and I asked my grandmother to go to the TD Bank down the street, and the idea was to have her be my front man to open my very first bank account, and I wanted to save for a green tractor. I think pulling on that thread, I've always been passionate with where food comes from, how it grows. Growing some of my own heirloom seeds more recently, and playing around with reviving some more biodiversity in the food ecosystem. It's something that's been part of my life for a very long time, and it's something that I've tried to bring to good food in many different ways.
You've been super ambitious, right, from a very young age, at the age of 5. You went on to study, I believe, at McGill. Is that right?
Yeah, I studied finance, accounting, and entrepreneurship. And so basically, I had no idea what I wanted to do or who I wanted to be when I grew up. And I thought I would try to accumulate the most amount of skills and, be qualified for nothing, but have lots of skills.
And like most successful founders that we read about, like their biographies, they were always itching to get out of the school system as soon as they got in. We hear stories like Bill Gates, et cetera, et cetera. What was the experience like for you? Was it similar?
So I think I enjoyed a lot of the friends that I met throughout my schooling. So some of my best friends today are actually from high school, and Good Foods, one of Good Foods' co-founders, Rafi. I met him in first grade, and our CFO Ross, I met him shortly thereafter. And then some of my best friends, colleagues, business acquaintances are from McGill as well. And one of the fun stories that I like to share is right after McGill, I went into the investment banking world at RBC Capital Markets. And in our analyst class that year, I met Josh Zemer, and he went off to found Skip the Dishes based out of Vancouver, and then myself and Neil and Rafi went off to found Good Food based in Montreal. And so there was something in the water in that RBC analyst class that was entrepreneurial, but a very specific kind of entrepreneurialism.
Absolutely. So this is all meant to happen. You graduate top of your class at McGill. You land a top tier job at a top tier employer, the biggest investment bank in Canada, and that all worked to your advantage. But then you left RBC to start what I believe was called MTL Capital. Can you tell us about that story? Not many people know about this before Good Food.
Yeah. So MTL Capital was a search fund. If you're familiar with the search fund concept, the idea is young entrepreneurs, recent business school grads, go out and find a group of investors to finance the search of the acquisition of a business. And so we raised, call it about $500,000 to finance a 2-year search to purchase a business that Neil and I would then become the co-CEOs of the business and actually take on operating roles in the business. And what we found attractive about the search fund model was at the time we left RBC, what we knew was we wanted to start our own business. We wanted to build something that wouldn't exist without us. We wanted to lead a business, but we didn't necessarily have the great idea that typically comes with starting a business from scratch. And so this entrepreneurship through acquisition path was one that we found quite interesting. We ran this search for a little over 13 months, and we realized at that point that it was going to be very challenging to find that mix of a business we're passionate about, we're suited to run the business, and we have some kind of edge in running the business, and we were going to find a great investment as well, right? The right transaction, the right multiple, the right structure. So the combination of those three things, I think at that particular time in 2013, was very difficult for us to identify. And so what we decided to do was return the remaining capital that we had raised and not used back to our investors. And we offered those investors the opportunity to invest in the seed round of a business that we were going to start, which ultimately turned into Goodfood.
Did any business come close, basically, were you almost at the closing mark at any of those businesses during the search phase?
Yeah, we had, I would say, about 4 LOIs that we were pretty serious about. One was in the food space. One was a digitally enabled learning platform. There was a coffee roasting brand based out of Chicago that was really interesting. And then there was a data center business that was more on the tech and telecom side. Those were the ones that I think we were most serious about. But the combination of paying the right price, getting the right structure, being passionate about it, and being better suited to run the business than anyone else that was going to be purchasing the business, ultimately we didn't find that overlap, and we felt that we would be better served starting a business from scratch.
Yep.
I think it was probably the right decision at the time, but I think these things are cyclical as well, right? If we were able to find a little bit less competition, a little bit better entry prices at the time, it could have been a very different outcome for us.
And from the majority of those top picks, I'm hearing food basically. So food has been a passion of yours for a very long time, and that's obviously the precursor to Goodfood. What was the name of Goodfood before it became Goodfood?
So Cutinist was the original name. We thought it was a very clever, invented word that we could own, that was reminiscent of the culinary arts, and that we loved. Unfortunately, when we started expanding outside of Quebec, we realized that Anglophone Canadians would have a really hard time pronouncing Cutinist, and we started being known as the Box. And so, as we realized that we were not going to be able to become a successful household brand across Canada with a name that was so hard to pronounce in English, we decided to rebrand. I believe this was in 2015 or 2016.
So shortly before the IPO, and Goodfood is just brilliant. It's a household name now. Who came up with the idea, and were there other meal kits at the time of inception? I'm totally curious what the competition was like at the time.
So one of the things we liked about the space at the time was there was very little innovation in the food space, in the grocery space, in restaurants. So we felt like there were so many different categories that had been disrupted or innovated on through the use of the internet and mobile phones. But food in general was still 99% an offline industry. So we liked that. We loved the fact that we had a personal passion for it. So from the sourcing and supply chain, but then also on the cooking side, my grandmother taught me how to cook, and I grew up in the kitchen with her. I was passionate about cooking Jamie Oliver and Gordon Ramsay cookbooks cover to cover, and so I'm very much a self-taught chef. And then, the internet is just something that I had been passionate about for as long as I can remember. My first business was actually like an eBay reselling business for collectible toys. And I did that while I was in high school. And so, there's something that just comes together and you go, I really feel like the pieces of the puzzle are coming together, and it's becoming clear to me that this is what I want to dedicate my life to. And then it became a question of bringing the right team around the table to be able to get it started. I had the big vision, the big ideas. I was able to share that in a compelling way, but I realized that my expertise was not going to be enough to bring the supply chain together, build a direct-to-consumer fulfillment ecosystem and infrastructure, build recipes, right? Like it was very apparent to me that we needed a really strong team to build this out. So Neil came on board, and he's been our COO almost since the beginning of the business. And then Rafi came on board as head of our supply chain and merchandising. And then we brought a CTO on, and then it started expanding from there. The industry was not very competitive in 2014 when we started, but by 2017 there were, I would say, about a dozen meal kit players in Canada, and then food delivery in general started becoming more competitive with the arrival of Uber Eats and Instacart and DoorDash. So it went from not very competitive to very competitive, and then the subsequent 7 years after that turned into consolidation of the space. And today we're essentially two national brands. There's HelloFresh, that's the German international meal kit player, and there's Goodfood, that's Canadian and operating across Canada.
And I have to ask now, I have to follow up, and we'll get into how tough it is to scale a business like this. But because you brought it up, collecting toys in high school, what were some of the favorite toy brands that you'd collect?
Anything related to Star Wars was
Nice.
was a hit.
Yeah.
And then
The
basically,
old original Kenner
yeah,
toys?
yeah,
Yeah, nice.
yeah. And I would basically go around to like garage sales, right? And I would just walk in. I was a young kid, and people wouldn't bat an eye, right? I'd pick them up, and did they know I was going to put it on the internet and sell it for 10 times what they sold it to me for.
Yep.
But it was amazing for me to understand, like, the power of the internet is being able to match niche passions together in a way that creates value. And it blew my mind what was going on eBay at the time.
Yep. And so, Good Food, when you started it, your vision was to basically be in every household, right? And I'm sure you still have that vision that you could, the majority of the population that, cooks, which is everybody, is going to at one point have a subscription to Good Food. Like that's the ambition at least, right?
Yeah, and the beauty of the business model is we're with our current fulfillment ecosystem, we can reach, call it over 95% of the Canadian population.
Wow.
And so that really gives us a lot of access to almost every household. We've been very careful about building out like product offerings and different plans that can suit different types of Canadian consumers. So our more kind of classic offering, it's very food forward. It's great for date nights, a little bit more elaborate cooking. We're making pizzas. There's fresh pasta. So that's kind of our classic core good food offering. Then we expanded into our family plan, which is 4 serving recipes. And when we first launched the family plan, we were the first meal kit company, I believe, in North America to be offering 4 serving meals. Before that, it was all based on having 2 serving meals. And so we were able to expand the TAM into households that had kids. And so today my wife and I have a 3-year-old and a 1-year-old at home. So we're on the family plan. We just had the shrimp and pesto pasta last
That sounds
night,
nice.
which was amazing.
Yeah.
And then more recently, I would say over the past 6 months, as we were seeing Canadian consumers getting more and more squeezed by inflation and trying to make ends meet with their budget, we launched our value meals, which are just under $10 per serving. And we're still getting great portion sizes. It's still delicious flavors, but it's a little bit more simple in terms of the number of ingredients, right? We'd be like 5 or 6 ingredients instead of 12 ingredients in our more classic recipes. And we found a way to make the meal kit more affordable. And so that's doing quite well. But yeah, we basically were carving out, with the access that we have to Canadians across the country, how do we tailor the meal solutions to the different types of households that exist.
Oh, it's just great. And 11 years later, you're now number one based on market share, right, in Canada as a meal kit provider.
As a Canadian meal kit, yeah.
Wonderful. And to provide inspiration to the entrepreneurs watching this who are just starting their own startups, I'm sure you had doubters, right, Jonathan, like in 2014, like, really? Do you really want to start a meal kit company? But like, tell us some of that and how you responded and how you just pressed on, right?
Yeah, so I think the part of what the doubters were telling me at the time was, this sounds like the most complicated business you could ever come up with, right? There's so many moving parts to have your own supply chain. So we work with farms and local purveyors across the country, which, by the way, today with the tariff conversations that are going on between Canada and the US, we feel pretty happy that we invested in those relationships for a very long time. Yeah. But the complexity of everything that needs to go right for this, for the experience to work for a customer, and to be able to do so profitably and consistently and repeatedly over time, it's an incredibly difficult business. And with 11 years of hindsight, I would say they were absolutely right about that comment. And I think there's a certain beginner's mind that benefits any entrepreneur that hasn't started their own business yet, because if they knew just how hard it was going to be, regardless of Good Food or any other business, you probably wouldn't start your own business. And it takes a certain vision and a pull in that direction to be able to deal with all of the challenges that will exist. Yep. I think I also think I wouldn't have had it any other way. Yeah. I loved my time at RBC. I made some incredible friends and business connections. I learned so much about the industries that I was involved with. So I would have, I loved it there. I think the golden handcuffs in finance are a real thing as well, right? Like, I had a clear path to be earning $1 million plus a year with very little risk, as long as I put my head down and worked really hard. And so to leave that behind, it sort of makes your parents scratch their head and wonder what they did wrong, right? For you to have that in front of you and take your own path. But to me, the flip side was, I'm going to go off. I'm going to be working on building something that wouldn't have existed without me. I'm bringing some of my closest friends on board for the ride. And every day I'm going to show up and do my very best to build this business, to grow the people within it, to make our customers happy. And the challenges and the rewards go hand in hand.
Well, thanks for taking the risk, and now we get to enjoy the delicious meals, right? That are so easy to cook and put together at home. I would love to know how you went from 0 to 100 customers, because people think, oh, that's simple, but it's an uphill battle, isn't it? So walk us through those very early days, the process, how you were even preparing the meal kits within the 0 to 100.
Yeah, so the 0 to 100 was quite challenging. We were using my apartment downtown Montreal as our fulfillment center, and I'll never forget the first week we were able to drum up about 20 orders from friends and family. We put the order together in my apartment, and we had Canada Post that was going to do the deliveries for us because we thought, hey, if we can outsource at least the delivery piece, we're going to simplify the business model a little bit. And Canada Post was supposed to show up at 4 p.m. They weren't there. 5 p.m. They weren't there. 6 p.m. They weren't there. And then we realized, okay, Canada Post is not showing up.
Yeah.
We need to pivot, and we need to figure out another way to get this food to our customers. Otherwise, it's a perishable product, right? Like it won't be fresh in a couple of days. So that's when we took the pivot. We took Neil's wife's car and started driving around town, making deliveries, and ultimately making it happen. And so, the learning there for me was, everybody goes in with a plan, but when you get punched in the face, you got to adapt and
Mike Tyson, right? Yeah, the famous
right?
line. Yeah.
You got to deal with the challenges that come at you.
Yeah.
And then, so it was mostly friends and family that were supporting us at first. Mm-hmm. And I was literally, of course, we were an online direct-to-consumer platform, but I was literally calling them every week saying, hey, you should place an order this week, right? And building that personal connection, talking about the menu, and growing from there. And then we hit our very first customer. I remember seeing on Stripe, we hit the first customer that I didn't recognize. I didn't recognize their name or their email address. And I said, oh, this is amazing. This is our first customer that's not friends or family. And we celebrated and we high-fived and we were
That's cool.
Over the moon. And then we found out 3 months later that it was actually one of our competitors' moms that had signed up to Goodfood to get an inside scoop around what we were doing. But at the time, it was still a huge win. So, but it was a lot of like doing things that wouldn't scale in order for us to prove out product market fit. And then by the time we hit 100 customers, then we started getting some good word of mouth going. And, 100 to 1,000, 1,000 to 10,000, most of it was through our referral program and word of mouth.
That's amazing. And at what point did you move out of your Montreal condo and acquire or start renting out a fulfillment center?
Yeah. So I'm happy to say today we're fully certified by the Food Inspection Agency of Canada, and we run a very tight operation. I feel
of
like
course,
I need to plug that. But it took us about 6 months to get enough critical mass to sign our first facility.
That's fast though, right? Like 6 months. Mm-hmm. Did you expect that to take longer? Where you were like, you know what, this might not work out, but it just 6 months is very quick.
Yeah, I think after quitting our jobs, signing a lease was probably the second biggest risk that we took.
Yes.
And it was a scary moment.
Yep.
We also thought it would be a good idea to move into the facility between Christmas and New Year's. And so it was kind of an exciting time, but quite challenging to get people together to move during that time period. And I think we were equally scared and excited. It's almost the same feeling, right? To be scared and excited.
Yeah, it really is. Were you coming up with the meal ideas in the early days? I know now you have a head chef, but it was all you. Is that right?
Yeah, in the early days, I would say I started coming up with the menus, then I passed it on to Neil, and then Neil passed it on to Rafi. And Rafi was building the menus up until the time that Jordana, our head chef today, joined, which I believe was about 2 or 3 years into our journey.
That's amazing. So 6 months in, you lease your first fulfillment center. How many customers did you have at that point of grand opening?
I don't remember. It was in the hundreds, not the thousands, I would say. And at that point, we were also still fully bootstrapped. We hadn't raised any outside capital up until that point.
Oh my goodness! And then, so who are the early believers? Who are the private investors who came in and said, "Hey, we're going to help you grow"?
So we chatted with a number of investors. The The reason why we wanted to raise capital was we saw that the market, as I was saying before, was becoming more and more competitive.
Hmm.
And in order for us to solidify our position in the market, we needed to invest into getting market share. We needed to professionalize our operations in a pretty significant way. And we also needed to expand across Canada and have additional fulfillment centers and facilities over the coming years.
Hmm.
And so that was the impetus to say, okay, we're going to go out and meet investors. VC investors were not interested in the space very much. I think they tend to shy away from any type of business that has real physical operations, and like manufacturing or logistics. They tend to love the idea of like high margin software that doesn't have so many moving parts.
Yeah.
So we ended up meeting Hamnet Hill, who was a successful entrepreneur based in Montreal.
Hmm.
And by chance, he had started a sustainable food investment fund called Edo Capital.
Okay.
And he had invested in like shrimp counting
Hmm.
technology, urban beekeeping products and technology. And we thought he was a really interesting fit because he had run his own business successfully. He wasn't just an investor that was going to, run advice through spreadsheets, but was talking from
Yeah.
real life experience. And we had a lot of alignment around how we wanted to use business as a force for good to build good food, whether it's through being active in the communities we service. We've been involved with the Breakfast Club of Canada for almost 10 years now, and becoming a B Corp. So all of those things were, we had an alignment of vision and philosophy,
Hmm.
and Hamnet became one of our closest mentors and board members over the years.
That's just awesome, and I believe you've also built sustainability into the actual packaging of good food, right? Can you tell us more about that since day
Yes, we
one?
were we were the first meal kit company, I believe, in the world to have fully recyclable packaging. So originally, if you can believe it, most of the players that were running meal kit delivery operations in the U.S. they were using styrofoam
Oh,
boxes
Jesus.
rather
I
than the
actually can't
cardboard
believe that.
boxes.
Really, around the same
So
time.
around in 2013, 2014,
Wow.
and single-use styrofoam boxes. It
Ooh.
was there was no like perishable direct-to-consumer delivery packaging at the time, so companies were using pharmaceutical packaging that you would use for like to keep vaccines cold, for example. Which it worked really well to keep the food fresh, but it had this terrible environmental impact. And so we reworked the packaging, fully recyclable cardboard boxes. We took all the toxic products out of the ice packs, so you can literally take our ice packs and put them down the sink
Hmm.
without any environmental impact. And we just chipped away at different pieces of the packaging to make it either recyclable or compostable, depending on the piece of packaging.
And then you obviously IPO'd, I believe it was 2016. Was that always part of the journey in your head to IPO, or were you reluctant to IPO? I'm curious about that.
We were reluctant. I
Yeah.
think we felt like we needed access to additional capital.
Hmm.
And at the time, we felt like the private sources of capital were drying up for us. The
Hmm.
VCs I mentioned were already pretty much excluded from the available capital. And we felt like if we wanted to raise another 20 or $30 million at the time, it was going to be very difficult for us to access it in the private markets. And so Derek, Derek Lithwick from Stifel approached me in kind of late 2016, and I knew him from RBC. So he was a VP at RBC while I was there as an analyst and an associate, and we had kept in touch over the years. He had moved to another bank, and he said, "You know what? I think what you're working on is really interesting. I think there's a public market out there that would be interested in supporting you guys and going public, and I think you should do it." And then, the thought process that was running through my head was being a public company is great when things are going well, and it's the most difficult thing when things are when things are challenging. But kind of weighing all sides of the equation, we decided to take the leap and take the business public, and we had support from some pretty notable investors, including Fidelity was part of the going public transaction, and a few Canadian funds as well that were with us for a few years as public investors.
And speaking of going well, it went really well during the pandemic because everyone's locked up in their homes. They're not going out to restaurants, and they turn to good food and start ordering en masse. Tell us about that experience. It must have been so hard to keep up with the surge in demand
For
in the
sure.
beginning.
So one of the things that I like to repeat to my team is, my expression is, good news, bad news, we'll see, right? Because when you first learn a piece of news or something happens, we tend to think about worst case scenarios, and then sometimes the worst case scenario happens, but sometimes you realize that you had it all wrong, and for us, COVID was exactly that example. So COVID hit, as you remember, and in the weeks leading up to COVID, I got pretty lucky because I started hearing about some of our suppliers in Asia talking about it, like packaging suppliers and things like that. And we said, okay, just in case this is something serious, let's order some masks and make sure that we have them for our teams that are within our production facilities, so that they can continue to operate if this thing becomes serious. And so we were pretty lucky to have that PPE available to us. I would say sales almost tripled overnight, and we were in a situation where even though we had the personal protective equipment for our employees, 85% of our fulfillment center employees stopped showing up to their shifts because they were scared to leave their houses, and demand was through the roof. And so it was a really incredibly challenging moment for the team to be able to figure out how could we meet the needs of our customers that need us now more than ever in a situation where we have limited resources. And the mantra that we were repeating at that time is, there's never a lack of resources, only a lack of resourcefulness. And so we got to be entrepreneurial. We got to figure out how to get the resources that we need to meet our customers' needs. And I think still today, many of our loyal customers at Goodfood today are customers that were onboarded during the pandemic, and we built that really deep emotional connection with them, knowing that we were there for them during some of those really difficult moments. And those are the same customers. In Eastern Canada this week, we had a massive snowstorm that was 40 centimeters over a 24-hour period, and we still had 99 or 90, maybe a little bit less, 98% of our deliveries were on time, in full, in the middle of this snowstorm. And so I think our customers have come to realize that they can depend on the Goodfood team regardless of what's going on in the world.
How did you encourage all those workers to come back to the fulfillment centers?
There was a lot of communication.
Yeah.
We would send daily videos talking about what's going on at Goodfood. I was in one of our fulfillment centers every single day, kind of moving around and being there in person.
Musk style, right? Almost like basically sleeping overnight, right? You're showing everyone that you're there, you're invested.
Right, because I realized really quickly I couldn't be hanging out at home, in a studio like this with my podcast mic telling people what to do, right? I needed to be on the ground. So I think that was helpful. We launched Hero Pay, which was a nice premium on the hourly rates. We did everything we could to create a safe working environment. Unfortunately, with a workforce of, I guess, close to 2,000 employees at the time. We did have one of our employees that passed away from COVID during
Oh.
that period, during the kind
Mm.
of the early weeks, and
Mm.
it was a scary moment for the team to hear
Yeah.
about that and to lose someone that was so close to us.
Exactly. And as a leader, you have to communicate that and just be their support, your entire employee base, right? It's very important. So obviously, growth, surge in demand, pandemic comes to an end, and then something else comes up, inflation. I'm sure you saw that coming. Obviously, it affected your input cost, right, for food, but then it also impacted the consumer. So walk us through how you retain customers, how you continue to grow the customer base through that period of inflation that we're finally coming out of, I think.
Yes. So we had two things going on simultaneously. We had this period of inflation, which our business had essentially been built on doing annual price increases.
Yeah.
And we realized through inflation that input costs and grocery prices were changing on a weekly basis upwards.
Yeah.
And
Wow.
I would say we were a little bit slow to adapt to how quickly prices were changing and how much it was going to affect us. We also had this, the second piece was the labor shortage. So we went from having access to lots of talent to suddenly, we had maybe a tenth of the applicants because there was so much demand for workers across Canada as the economy was reopening. And then the last piece I think that was challenging for us as well is during the pandemic, we were forced to make some decisions around what we wanted our fulfillment center network to look like over the next 5 years, right? So to build out capacity, to build out fulfillment centers, it's a multi-year process that you commit to. And so we were committing to a fulfillment center footprint with a certain expectation of where volumes were going to be. And when the volumes pulled back, we realized that we had way too much fulfillment center space for what we were expecting in terms of future demand. So the combination of those three things really sent Goodfood into a tailspin, and we basically found ourselves in a fight for our lives right after having this incredible explosion in the business. And so coming back to the good news, bad news, we'll see. This same event, COVID, went from it's the worst thing for the business to it's the best thing for the business to it's the worst thing for the business. And it's all the same event. It's just different time periods that we were experiencing.
Yeah, absolutely. The past 5 years, I'm sure, has been a challenge, just projecting growth and meeting demand. But now that that's all leveled off, what is your projection for growth now over the next 5 years?
Yeah. So I think maybe just to close off, what we did from there
Sure.
was first we completely revamped the optics in the business and our ability to reprice our inputs and reprice our retail pricing on a real-time basis based on how our cost structure was moving on an hour-to-hour basis. That was how we addressed the inflationary piece, and to try to take as much cost out of the business so that we can continue providing value to our customers while staying on our path to profitability. That was the inflation piece. The fulfillment center piece, we needed to work with our landlords and relook at all of our future footprint that we were building out and rationalize it together. So today we have one manufacturing and fulfillment center that services Eastern Canada and one that services Western Canada.
Okay.
And that created a lot of efficiencies and streamlining in the business. And then, as we think about future demand, for us, where we want it to be was, regardless of where future demand is, regardless of what happens in the external world, the marching beat within Goodfood was, in order for us to survive this, we need to be in charge of our own destiny. We need to be cash flow positive, and it needed to be like a radical change within the business to make that happen. And so we're now in our ninth quarter of profitable EBITDA, and over the past 12 months, we've done close to 10 million of free cash flow. So I'm incredibly proud of how the team turned the situation around. I think today's consumer environment is still difficult, right? And to answer the question around what does the future volume look like for good food, I think in the long term, it's bright. The future is bright for us. There's still, if we think about how many meals are consumed in Canada each year, there's 40 million people that are eating 3 times a day, 7 days a week. There's billions of meals for us to go out and service and help our customers meet those needs. But the reality in the short term is we have the tariffs that are creating uncertainty. We have very slow economy. We're 7 quarters of GDP per capita contraction in Canada. There's just a lot of uncertainty in the short term.
How many meal kits do you deliver on average per day, would you say now?
Let's say our annual, last 12 months, we did 15 million meals in the past 12 months.
That's amazing, Jonathan. It's hard to even fathom, right? The logistics alone.
A lot of
it's just
moving
incredible.
Parts. A lot of moving parts. And when there's a snowstorm, you do not want to be running a perishable delivery network. I'll tell you that.
Wow, that's just phenomenal. I believe during those years following the pandemic, shortly after the surge in demand, it was a firm called, I think, Phoenician Capital out of the U.S., who is now, I believe, the largest shareholder after you and I think even bigger than you and your co-founder. How did that come about? How did they spot the opportunity, and I'm sure they contacted you, and tell us about Phoenician Capital's entry.
Yeah, so John Cabaz is the founder of Phoenician Capital. Phoenician Capital is based out of New York, and John Cabaz was a McGill grad. He did his undergrad at McGill, and then did his MBA at Columbia.
The McGill connection, okay.
Yeah, and so his fund is a kind of a growth value fund, or I don't know exactly how you would call it, but it's looking for free cash flow growth is how I would call it. And they run a global fund, but the connection was really we were both McGill grads, and so we felt like it was kind of an easy introduction together. From the early days of when John Cabaz first invested, his interest was in becoming like a third partner in the business, and so he wanted to get his equity stake close to what Neil and I's individual equity stakes are at. That was kind of his thinking, to be a meaningful shareholder in the business. And they run a fairly concentrated fund. I would say certainly less than 20 names at any given time in the small cap space globally. I don't think his original intent was to take a seat on our board, but he's been on the Goodfood board since 2022. Okay. And the story behind that was, as Goodfood was running into some significant challenges, we started interacting on a more frequent basis. He obviously wanted more information and more visibility on what was going on. And I was frankly looking for as much help as I can get. And so, I started bouncing ideas with him. He's also an investor that's not only a financial investor, but he had also run his own business, which is a common theme in the people that I try to surround myself with. I think Warren Buffett said this actually, right? Being an investor makes you a better operator, and being an operator makes you a better investor. And I think that's very much John Cabaz's situation. So he had run a textile manufacturing business with a few thousand employees between kind of before he did his MBA and then before starting his fund. And so he had that really interesting experience of he's been an operator and he's a great investor. and his fund is actually kind of the biggest anchor tenant of his fund, other than his personal capital, which I love as well, is Mubadala, the sovereign wealth fund, and they
Oh,
just have a wealth of connections and information in pretty much every single internet business that exists globally. So I've had really a lot of benefit and support from working together. I think the relationship could have evolved in either direction. When things are going sideways, it could become an animosity and a lot of friction in the relationship. And although we had some tough conversations, overall we decided that the approach we would take together is to work together, turn the business around, become close partners, and that's exactly what we've done over the past 2 years.
that's super
Going on our
interesting.
third year.
I love that quote from Buffett, and he does have more similarities with Buffett because Buffett was briefly in the textile business as soon as he acquired Berkshire Hathaway and then
Yes,
turned it into a
yes.
conglomerate. That's really interesting. So tell us about the recent developments because you are evolving Good Food. Good Food obviously started as a meal kit business, but there's so much more you can tap into, right? There's grocery, there's consumer products as well that you can acquire and roll up and then to sell directly to consumers. Um, Tell us more about how Good Food's evolved.
Yeah. So the way we're thinking about it is within our core meals business, we're investing in two things: convenience and personalization. That's really what we're doing on the core meals business. Convenience is around how do we keep really delicious meal kits that are satisfying but have less prep work, right? Like certain pre-cooked ingredients, pre-chopped ingredients. How do we make it easy to get dinner on the table, for weeknight meals? And that's one of the biggest requests that we've had from customers. The other thing that comes to mind with regards to convenience is moving towards the prepared meals category. So most of our sales today are ready to cook meals,
Yeah.
and we see a pretty significant opportunity for us to move into the prepared meals category and offer more options for our customers in terms of spectrum of cooking fully from scratch to cooking something with a lot of pre-chopped, pre-cooked, pre-marinated ingredients that can accelerate the time in the kitchen, to fully cooked meals that are heat and serve in the oven or the microwave. So that's kind of the core convenience angle. And we think that can live both online direct to consumer, but also in certain retail environments as well, where we can spread our brand into certain exciting retail partnerships. And then on the personalization side, we've started doing a little bit of this over the past year, but really using the power of the data that we have to personalize the experience, provide more recommendations to our customers in terms of what they're seeing in our meal selection, and better meet their needs through the data that we have.
Have you used AI for any of that?
So we're currently plugging in AI absolutely to make
Yeah.
that happen. We've used AI successfully in a number of places within the business so far. Our customer support experience is powered primarily through AI right now, and it's been an incredible way to reduce the human interactions with our customers by 70%. So if you think about, customer service went from one of our largest cost items on the P&L to a very small cost item.
That's great.
And then recipe development. So not just the personalization of the experience that the customer gets at the end, but also the way in which we're developing recipes to meet customer needs, hit price points, take all of the input and the data from our supply chain partners, farming partners, to make sure that we're making the most of what we're selling to our customers. So that's kind of on the core meals side. And then within our acquisition strategy, which John Cabaz has been working with us closely.
Mm-hmm.
The intent there is using capital allocation to create more shareholder value.
Mm-hmm.
And one of the other than capital, one of the big assets that we have within Good Food is the infrastructure that we've built across the country. So
Mm-hmm.
thinking about how we can leverage that infrastructure to accelerate other brands, as well as our customer database, right? Cross-selling and cross-marketing products within the the hundreds of thousands or millions of households that have interacted with Good Food now or in the past. And so the strategy there is we're acquiring small next generation brands. I would say 500,000 of EBITDA all the way to kind of the 5 million EBITDA mark. That's kind
Mm-hmm.
of the sweet spot range. We're trying to come in below private equity players or funds, the kind of size that they would be looking for in a business, trying to come below that size. And we're positioning ourselves as for entrepreneurs by entrepreneurs. And
Mm-hmm.
so we're looking for founders that have built up their business to a certain scale and want to work with us to get to the next level. So they're not thinking
Oh,
of Good Food as the exit strategy, but it's more a step on their journey to take their business to the next level.
how to turbocharge their growth. If there are founders watching this now, can they contact you on the side, Jonathan?
So I'd love that for
Yeah.
sure. You can email me at jonathan@makegoodfood.ca. That's probably the easiest way to contact me and to tell me about your business. And I would love to chat with you. We completed our first acquisition in November of 2024. It
Was that the
was
tea company?
exactly
Okay.
Genuine Tea.
Yeah.
And founder-led business. Sarah and Dave founded the business and are excited to continue running the business. And we also left them with a 20% equity stake in the Genuine Tea business so that they're still aligned with the upside. And as we go from from the smaller scale of the business today, scaling it up to $100 million plus, they're going to benefit in the upside of that business. So they're like a really interesting case study for the type of acquisition that we're looking to do. And anybody that's based in Toronto has probably heard of Genuine Tea. They're one of the leaders in the craft tea movement in Toronto. It was one of the first businesses to bring authentic Japanese matcha to Canada.
Oh.
And they're just a beautiful founder-led business, customer-centric, great product innovation, and growing like crazy. I just looked at the January financials. Sales and profits are up close to 50% year over year, and so it's a
Wow.
really exciting business.
How do they scale their business in the beginning? Like, how do they market and advertise the product?
So they have a great founding story. They're a husband and wife duo,
Yeah.
and they met working together, or actually they met doing their MBAs in Taiwan, and so that's where they discovered their love of tea, direct sourcing from tea farms, and brought that back to Toronto to start their brand. They also appeared on Dragon's Den a few years ago and received a successful investment from Arlene Dickinson. And they've just done an incredible storytelling within their brand to bring that product to Canadians. I think the other piece that we found exciting about the Genuine Tea story is, frankly, unlike Good Food that's been 99% direct to consumer for the past 10 years, they've built out a really robust omni-channel strategy where there's about a third of their sales that are online, but the other two-thirds are a mix of being in third wave coffee shops, hotels, like higher end hotels, hospitality, grocery segment, and then also powering other brands through their private label offerings. And so they have a really nice diversified revenue stream.
Well, that's just great. I'll have to give their matcha tea a try. I was in Japan. I just love matcha. I was just obsessed. There's a cafe in Japan. I think it was called Detour Cafe, which is all over the country, and it was a great hangout. What would you love to make for your second and third acquisitions, Jonathan? Like what category are you thinking of?
So I would say certainly anything related to meal solutions
Hmm.
is something we know and understand well. And then if we expand outside of that, things that could go well with meals or with dinners, right? Like that can complement them.
Hmm.
So other than tea, other beverages like coffee,
Hmm.
juices, desserts, snacks, um, anything that could kind of complement our service offering. And we especially love when there's an overlap between our core customer and the acquired company's core customer so
Yep.
that we can cross sell. And then, the last piece is working with founders that are excited to continue growing their business. I think, for us, maintaining the entrepreneurial DNA that has made the business successful is something that we really understand as entrepreneurs. And it's something that we're looking to preserve in the businesses that we partner with.
Yep. And you mentioned that the meal kit industry went through a lot of consolidation. There were quite a few startups. Were you a acquirer of any direct competitor during that time?
So we looked at a few,
Yep.
and we ultimately were not successful in acquiring any of our competitors.
Hmm.
We looked at one in Toronto, one in Quebec, and one in the U.S.
Hmm.
I think for us, probably the one with the most strategic value would have actually been expanding outside of Canada versus continuing to consolidate the Canadian market because we felt like our market share in Canada was kind of sizable and defensible. But ultimately, we weren't successful in closing any of those deals.
What's your plan to grow market share in the U.S. and where are you at now?
So right now, Goodfood doesn't have sales in the U.S. Genuine Tea does about 10% of the sales in the U.S. So it's relatively small. Certainly, the tariffs that are being discussed now between Canada and the U.S. are creating a lot of uncertainty for brands.
Hmm.
And so, as we think about our future U.S. expansion, we're trying to get a little bit more visibility and certainty around where that goes. But I would say Genuine Tea does seem to have an exciting runway into the U.S., building out on their current market share and ultimately replicating their successful Canadian strategy into the U.S. market.
But so you have no plans in the short term to basically enter the meal kit market in the U.S. from what I'm hearing.
I think we can be opportunistic with regards to an M&A opportunity. I
Okay.
think our base plan wouldn't be to have an organic good food expansion within the U.S. because of the startup costs and
Yeah.
what it takes to really gain market share. I think opportunistically buying a competitor in the U.S. that would be something that we would keep our eyes open to.
And then on the reverse end of it, I think a few years ago there were rumors about a competitor eyeing Good Food. Was there any truth to
Where'd you hear
those
that?
rumors? I forget where. I'm sure you can't really comment, right? But
What I'll say is, like we have had conversations with different types of partners, some grocers, some other meal kit players. I think as a public company, we also need to be open to whatever's best for our shareholders, right?
mhm.
And so, even though I could see myself running Good Food for the next 20 years, we need to make sure that we're always doing what's right for our shareholders. And if at some point in time it makes sense for us to do one of these deals because it's best for our shareholders, I'll be all over it. And if it's not the right thing, and I don't think the value creation is there, We do have the luxury of having, within our board of directors, there's close to 40% of our shareholders that are represented by the members of the board. And so we do have the ability to block a deal that doesn't make sense.
And so you mentioned that going from 0 to 1,000 customers, it was largely customer acquisition through the referral program, people who are already buying, and word of mouth as well. What is the client acquisition strategy today? Like, I'm just curious to know how that budget is allocated.
Yeah, so I would say we in terms of phases, we started with like mostly word of mouth at first.
Yep.
Then we went into the lowest hanging fruit is really the performance marketing on the digital side. So Facebook, and then later Instagram, and then later kind of adding in now X and other platforms. That was kind of the second phase. And then the third phase was really building out a multi-channel, traditional and digital marketing capability. I brought on Jen, she's our chief customer officer, but she started off as our EVP marketing. And she brought the experience. She has, most recently she was at Walmart, so working with big budgets, massive retailers, driving a lot of traffic. And then before that, she was in the CPG space, working at like Nestle and those kinds of brands to grow CPG brands. And so she really brought a lot of structure to our marketing process and to the way in which we allocate capital on the marketing team in a way that I couldn't do on my own. So I was very entrepreneurial and jumping on opportunities when I was running marketing directly myself. But she's really brought in the professionalism to take it to the next level. And we have a lot more metrics. We're doing media mix modeling. We have significantly more insights, and we really understand how the different pieces of our marketing budget can be optimized. And the reality is we need to continuously optimize it. Something that was working last quarter or last year is not necessarily going to be working next year. And so it's this ongoing process and machine.
Yeah, awesome. There's definitely science behind it now, and there's someone dedicated to growing the customer base. The buying experience, is it still just completely through the website, or do you have an app now? How's that evolved?
Yeah, we do have an app. I would say close to 80% of our customers are like signing up and interacting with us either on mobile or on app. It's just been a natural shift within our customer base, and we talk about being where our customer wants us to be. So although you can find us on desktop, the vast majority of our customers interact with us on mobile or on the app.
And then what are the retention strategies and tactics? I'm sure there's a lot built into the app itself. Curious to know.
Yeah, I think at some point the industry in general was just using discounts and incentives as the primary driver for loyalty. So we do a little bit of that in a targeted way, and we revamped our CRM, our customer relationship management software, to be able to get really targeted on which customers need an offer when within their life cycle to extend the lifetime value of the customers. So we do some of that. And then small things like, we created a VIP program that gets access, like our best customers get access to human customer service. That's, the fastest reaction, our best agents, so that whenever there is a problem, there's this direct one-to-one interaction with our customer service. And then small gifts go a long way. So we did a 10th anniversary Good Food cookbook that we shared with our best customers. We also created live events in 2024 for the first time. So we got like celebrity chef influencers like Laurent Dagenet and Maddie Matheson So they would like create recipes for good food, but then also have live events in person where we could have 50 or 100 good food VIPs experience the good food brand in person. But yeah, I think you need to get really creative to be able to stick out of the pack and do things that customers will actually notice and remember.
Interesting. Now, you made a groundbreaking announcement, Jonathan, recently. I think it happened within the last month, where you're going to start investing some of the cash into Bitcoin, and I think people were, surprised at that move. But you've been an early adopter personally in Bitcoin, I believe. In 2015, you started acquiring Bitcoin. So why now, and what's the strategy behind that for Good Food?
Yeah, so you're right. We just announced it about a month ago. It was in January 2025.
Yep.
And we announced our Bitcoin treasury strategy, which essentially means the cash that we're keeping on our balance sheet, part of it is going to be kept in Canadian dollars, and part of it is going to be kept in Bitcoin. The thinking behind it started about 8 months ago. So
Yep.
I would say early 2024, we started having conversations thinking, okay, we have between 20 and $25 million on our balance sheet. And every year that those dollars are worth less in purchasing power, right? And it's partly due to inflation, but also money printing and all the uncertainty that exists with fiat currencies. And I think the biggest problem with fiat currencies is you can print, or the central banks can print as much of the fiat currency as they want. And so for a company to be storing hard-earned dollars in a vehicle, the Canadian dollar, that can be printed infinitely is something that as a board we thought was not the best way to store the economic value of our balance sheet. And you're right, it's something that I've been involved in since 2015. And when we first announced it in January of this year, one of the questions that I was getting was, hey, are you jumping on some kind of bandwagon, right? Of like, so Bitcoin hit 100K and you're just trying to get a little bit of publicity, and is this what's going on? And I had to sort of explain that, well, yes, there's excitement around the 100K milestone, but the reality is my interest has been since 2015. I was involved as an investor in some of the early miners. I made the decision to never sell a single Bitcoin that we mined.
Wow.
And ultimately, I felt quite clever up until 2017. There was a massive crash in 2017, right? The crypto winter. And as Bitcoin was bottoming after that crypto winter, I had to really think about what I was holding, what the value of it was, and really double down on my commitment and conviction to this new monetary system or not, right? It was going to be one of those two things. And for me, it was a double down moment where I said, you know what, I think there's been no hacking of the network since 2009. The adoption has been growing faster than the internet. The hash rates and all of the power that's being committed to securing Bitcoin has only been growing over the past 16 years. And my conviction that companies, people, governments should be storing their money in something that is actually scarce, portable, divisible, globally desirable, is very strong. And I think we're in the second phase of the Bitcoin adoption right now, in my opinion. So the first 10 years was primarily individuals that were adopting Bitcoin, holding coins. Like it was very individual driven. Now we're starting to see some companies like Goodfood. So we're one of 70 public companies globally to have Bitcoin on their balance sheet.
Are you the first in Canada to have Bitcoin on the balance sheet?
So we're the first non-financial
Oh, okay.
business listed on the TSX. So there are some miners on the TSX, but outside the miners, we're the first ones listed on the TSX.
This is notable. Is there one company in particular globally that served as a model for you where you said, "Hey, like, this is a good idea. I'm investing in Bitcoin personally, but they've gone ahead with it. They're a public company. We should do the same for Goodfood." Was there
Yeah.
one particular?
So I think we followed like there was MicroStrategy in 2020 that started buying Bitcoin, and then last year there was MetaPlanet based out of Japan, and there was Semler Scientific where Eric Semler is the chairman, that also started buying out of the U.S. in 2024. So we kind of looked at them, but I think in the second phase of adoption that we're seeing now, we have small businesses that are buying Bitcoin, and after we made the announcement, we had a lot of small public companies and private companies that reached out to me to, not necessarily make a move, but learn more about it and understand how they could create shareholder value by adopting Bitcoin. And then, I think as we keep moving forward, I think we're going to see larger companies adopting, and we're going to see more governments as well, like larger governments. Right now, El Salvador has adopted Bitcoin.
Yes, which is a
But
very smart decision, right? To
I think we'll
enrich the whole
see.
country. Yeah.
Yeah, exactly. And they just paid for electricity for all of their citizens for the month of
Wow.
January, based on the some of the profits that they've made on their Bitcoin. But I think in order to have conviction in Bitcoin and this new monetary system, you really need to know what you're buying. And so, when individuals come to me and say, "Hey, John, should I buy Bitcoin?" Um, you know, the number one thing I'll say is, if it drops 50% and you don't double your position, you should not be investing in Bitcoin, right? You will buy high and sell low 100% of the time.
Yeah.
So you really need to know what you're buying, why you're buying it, and commit to a long-term vision around it.
The story that pops into my head right now is I think it was 2011 or 12 where that guy who had one or two or three bitcoins paid for his Domino's pizza in those three bitcoins. I forget the quantity, and obviously he's kicking himself. So I'd love to know more, Jonathan. Are you going to bake this into the buying experience, and can someone soon, purchase the meal kit subscription through Goodfood using Bitcoin? Is that part of the strategy?
So yes, we actually had a number. I wasn't exactly sure what the reaction would be from our customer base when we made the announcement, and we actually had a number of customers reaching out to us. Some saying, this is a great move. I'm a Bitcoiner as well. I'm going to resubscribe to
Oh,
Good Food
wow.
now, which was
Yeah.
an amazing comment. And then we had a lot of questions around, can I use my Bitcoin to purchase my weekly Good Food? And so the answer is yes. We're working on that. As a public company, we need to make sure that we're following all the regulation and we're doing everything in the safest way possible. But it is in our plans, and there's a very strong community of Bitcoiners in Canada that we're excited to be part of.
And your payment processor at the moment, is that Stripe? Or do
We
you?
do work with Stripe.
Okay.
They just completed the acquisition. I forget the name of it, of a fairly large, like tokenized crypto processor.
Okay.
So I don't know if we could tap into them or if there's a different solution, but they're starting to get into the crypto space as well.
Yeah. So I'm super curious. We'll get back to Good Food, the core business soon, but I've heard theories out there that one Bitcoin will eventually, ultimately, be worth $1 million USD. What is your prediction? Is there any science behind it?
So I think the best way to think about it is, what what share of global wealth will flow into Bitcoin, right? And it's an adoption story, just like every other adoption story, right? So at some point it was the internet, right? So what percentage of the global population is going to get access to the internet when, right? And we went from 0% to 70+% today. Then there was mobile phones, right? What percentage of the global population is going to have access to mobile phones over time? And the way that I think about Bitcoin is in terms of global wealth, what percentage of global wealth will adopt Bitcoin and be stored in Bitcoin? And I would say in order to get to $2 million a coin, it represents about 4-ish% of global wealth flowing into Bitcoin. And that's assuming current global wealth, right? Like not future global wealth 5, 10, 20 years from now. And so I think that's it's something that sounds, I don't want to say realistic. I want to say it's not a drastically different world in which 4% of global wealth is held in Bitcoin. And I think there are like billions of people and corporations and governments on the planet that need Bitcoin. One more story I can share is part of what made Bitcoin click for me was my looking back at my own family history. So I shared, my dad is Swiss Italian, and that side of the family comes from Switzerland. And then on my mom's side, we're of Greek descent, but the family was living in Turkey.
Okay.
And so, the family had...
I see where the story is going. Yeah,
Right.
Inflation, hyperinflation,
We had
essentially.
hyperinflation, political turmoil, and at some point the government decided that, some version of Greek citizens were no longer really welcome at the time to be living in Istanbul. There was a lot of political
I didn't know about that
friction
history.
happening.
Wow. Yeah.
And so, when political instability happens, and the family had wealth stored in real estate, like downtown city blocks, businesses that were like local printing businesses in Turkey. When you're in that situation where the political situation is changing and you feel the need to leave, but all of your assets are tied up in things that are not physically mobile and are not globally desirable, you quickly realize that you need another solution. And for them, the solution was, we're going to take our jewels, right? We're going to take whatever, gold coins we can, right? Nothing all of that material, but that's what that's the portable store of wealth that we had in the past as a human civilization, and that's been true for thousands of years, right? Seashells, gold coins, jewelry, right? These are all things that we've used to store and transport wealth over time. And, I think once you start to understand how many people need access to this kind of portable, globally desirable store of value and wealth, and you understand how many countries are experiencing hyperinflation, like you mentioned, you realize that there's a real need for it. And in Canada, we might not have what's described as hyperinflation, but in the past 10 years, we've gone from a money supply of $1.5 trillion to a money supply of $2.5 trillion in only 10 years. And so we might not be experiencing hyperinflation, but if you print $1 trillion Canadian dollars, you shouldn't be surprised after that, your price of chicken is through the roof and your price of eggs has gone through the roof. The reality is, what people need to understand is the cost of producing eggs, the cost of growing chickens, and I'm talking locally, right? Not importing them from other countries. The cost of producing those things locally has actually gone down, right? We've become, by all accounts, more productive and efficient at producing food, and yet the cost of food has gone up 2, 3, 4x over the past 10 years. And the reason behind that is money printing, right? And so for individuals or companies to store their value in Canadian dollars, to me feels like there needs to be a change in corporate finance, and
Yeah.
I'm excited to see where it goes.
Well, good on you for being a pioneer, and we certainly got the taste, being Canadians, of high inflation. This generation hasn't seen anything like it, right, in the past 3 years. If Bitcoin is the new gold, is Ethereum the new silver? Jonathan, what's your take on Ethereum?
So, what I will say is, I've done all of my research on Bitcoin,
Yeah,
and that's what have done my deep dive on, and
yeah.
I'm very careful not to have, opinions on things that I haven't done enough research on. I have heard about some pretty incredible projects that are being launched in the Ethereum space, and a lot of them right here out of Toronto, right, that are being
The
funded.
co-founder and the founder are both Canadians. Is that right?
Exactly.
Yeah.
Yes. Yes. So there's a lot of exciting things going on. What have you seen in the space? I'd be curious to get your thoughts.
Yeah, the only two would be Bitcoin and Ethereum that I would hold, and I have held both in the past. I had my old Ledger cold storage device, which I absolutely recommend to someone who's looking to accumulate, right, and rather than just holding the cryptocurrency on the exchange. I've been reading a lot of interesting theories recently, Jonathan. I'm sure you've seen the same, where I think people are getting closer, a select group are getting closer to understanding who the founder of Bitcoin actually is, and a lot of people are pointing now to Jack Dorsey. What do you think about that theory?
So I've heard everything from Jack Dorsey to the CIA, and I'm not sure which one is more likely. I hope that the founders stay anonymous forever. I think that one of the big power of Bitcoin is to be fully decentralized.
Hmm.
If there was if it was centralized in any way, if we knew about the founders, if it was any of that came to light, it would be very difficult for Bitcoin to be a fully neutral global commodity. And
Hmm.
so I hope we never find out. But your guess is as good as mine.
Interesting. Aside from Bitcoin, you've also made, I believe, a personal investment, not through Goodfood, separately in SpaceX. Is that true?
I did. This was a few years ago, when there were shareholders from SpaceX that were trying to, they had made some money and they wanted to do a secondary sale. And, I was geeking out at looking at everything that was going on right in space, and the idea that we could create, and it was just a dream at the time, right, to create
Yeah.
reusable rockets that we could catch with chopsticks. And I got really interested in that, and so I made the investment, and it's been certainly one of my best performing personal investments.
That's just awesome. And I believe the objective is for SpaceX IPO, I think, one day, right? So it's accessible in the public market, I think.
Yes, that's what I've heard. There's certainly
Yeah.
like the underlying business that's being built around Starlink seems to be
Yeah.
doing really well. So, telecommunications and the ability to provide internet anywhere around the world. That seems like an exciting business opportunity. And I would also, I think the idea of seeing humans turn into a multiplanetary species, I think that
Ooh.
would be exciting.
Yeah.
But you have to have a really long-term vision to believe in that.
Absolutely. I believe there's a publicly traded vehicle on the TSX called Stack Group, and one of their investments is in SpaceX. So if people are curious about gaining exposure to SpaceX, if they can't do it directly, which is tough to do. Not everyone's Jonathan with connections. And just full disclosure, I don't hold an investment in Stack Group, but if anyone's curious,
Is it
and you
like
also
an ETF
invest.
of private companies? Is that the
Yeah, yeah,
okay?
basically, yeah, publicly traded
Hmm.
on the TSX, and you also invest in, I think, still to this day, a Tights company. So like Bitcoin, SpaceX, and the Tights company. Tell us more about that.
Yes. So SRTX is the name
Yeah.
of the tights business. And I met the founder, Catherine, at the Creative Destruction Lab, which is kind of the incubation lab at the U of T in Toronto.
Hmm.
And she started talking to me about her business, and I was seeing a lot of similarities to the good food business. She was talking about building vertically integrated manufacturing for her tights, and she actually opened up a massive manufacturing facility in Montreal
Hmm.
that services Canada, the U.S., and Europe.
Yeah.
And I think the exciting piece around the business is not just the manufacturing of the tights, but the company has developed a number of proprietary materials
Mm.
that can power the future of sustainable clothing. And
Okay.
so, if you think about tights, there's a billion pairs of disposable tights that end up in landfills every single year,
Yeah.
and the tights that are marketed under the name SheerTex are considered to be 10 times more robust, 10 times more usable than the pairs of tights that have dominated the market in the past. So there's a really interesting social, environmental component to it.
Yeah.
The business certainly is experiencing some challenges with the tariff discussions that we have today. There's about 80% of the sales that are in the US, and the product is fully manufactured in Canada. So it's certainly an example of a Canadian business that we as Canadians need to support.
Hmm.
But it's been an incredible journey. H&M, the Swedish
Oh.
retailer, is one of the
Hmm.
big investors at SheerTex,
Yeah.
and the business has raised close to $200 million over the past 6 years. And I've been
Wow.
honored to be a board member. I've been on the board for 2 years now, and I've been enjoying the journey as a board member and trying to support the business every way in which I can.
That's awesome, Jonathan. So I see the mantra here in your philosophy. It's sustainable disruption, right?
Hmm.
Basically,
Hmm.
there's the big vision. So what would be your elevator pitch, Jonathan, if we go back to Good Food Market? And what are you most excited about? And what should investors be excited about for the next 5 years of Good Food?
So I think the building a global leading portfolio of next generation brands is what we're excited about at the holding company level, at the
Hmm.
public company essentially. And we see an incredible opportunity for us to expand into new markets and new brands, leveraging the assets that we've built over time. And we're seeing a number of founder-led businesses that are excited to join our platform. So I think that's something that we're very excited about. And then within the core meals business, I talked about the uncertainty that exists today with consumer spending and the challenges that Canadians are experiencing.
Hmm.
So it is we continue to experience volatility in the core meals business, but I'm steadfast in my long-term belief that there are billions of meal opportunities every single year that Good Food has the opportunity to meet and to play an active role in our customers' lives. And so
Hmm.
to go from the 15 million meals a year that we're at today and growing it with the right product offering, the convenience, the personalization we talked about, I feel very confident that in the longer term we could capture a more sizable piece of the market. But our team is working really hard to face some of the challenges that we're seeing today.
I love it. And last question, I promise. What's that killer meal right now? That's your favorite meal on the menu that people need to just go out and order at Good Food.
Let me think about that one. We have an incredible lobster pasta that's currently on the
Oh,
menu. So we
okay.
have locally sourced from the Maritimes lobster. The pasta is fresh pasta from our family-owned pasta supplier, and it's easy to make. It's absolutely delicious. I wish we were recording this before Valentine's Day. I would have recommended it for a Valentine's Day dinner.
Yeah.
But it's one of my favorites with a little bit of toasted panko breadcrumbs on top.
Oh,
It's a delicious meal.
that sounds lovely. You're making me drool for people who aren't watching but are listening on Spotify. Thanks for the conversation, Jonathan. This is awesome, and thanks for building such a fantastic business. And I wish you all the success. And here's to outstanding 2025.
Thank you so much. And as I shared, if anyone wants to connect with me by email, I'm Jonathan at makegoodfood.ca. Happy to interact. You can also find me on Instagram, johnferrari21. And I'm also pretty active on LinkedIn as well if you want to connect there. And so, I'd love for the audience to connect and reach out and continue building out this community.
Awesome. Have a good one, Jonathan. Talk soon.
Thank you.